Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the specific area of Module C. Everyone, first of all, a few requests. Number one, please share the session, please like the session, and don't forget to subscribe to our channel, everyone. Now, Acha everyone, what do you think we should be doing right now? We should be dealing with a lot of topics right now. No? At this point of time, I've covered Module A and B. Now, currently I'm covering Module C, right? So this is what we're going to deal with in our classes. So let's talk about this specific area all together, everyone. Please share the session and don't forget to like it, because even your little efforts makes a big difference, isn't it? Acha, chaliye then. Let's go ahead and look forward towards our class. Acha everyone, our Mahamarathon is on. Our Mahamarathon is on 20th. So please be there. The Mahamarathon would be at 6 a.m. in the morning on 20th. So please be there in that particular session. Save the details so that you remember on that particular day to go ahead and be there for the session. And I'm giving you the details of the same as well. Chaliye. Now let me show you the particular schedule as well. Our schedule is specifically for the entire YT sessions that we are taking up. So let me show you that. Achha, this is the particular schedule, everyone. Look at this schedule. Okay, I hope you can see the schedule right now. This is the schedule that we are covering up right now. Okay, everyone. Sunday on 16th of June, we had our class. 17th, there we had a class. And on 18th, we are discussing Module C. Yesterday, I had covered in the evening session at 9 p.m. I had covered the topic of BRS. Today, I'm covering the area of Module C. And then we are left with module 19th. On 19th, I'm going to pick up the complete numerical area. And once we're done with all these together, then we'll move on towards the area of final marathon and the Mahamarathon. Done, everyone? Chaliye, then let's begin. Chaliye. Here comes the first question, everyone. Which principle states that... What is the answer, everyone? Go ahead and answer. Look at the specific question altogether. Okay, everyone, what's the question first? Which principle states that the rupee received today is more valuable than the rupee received in future? Do you know we have talked about this earlier as well? है ना? Which principle states that rupee received today, I'm sorry, is more valuable? Opportunity cost says that. Opportunity cost says that next best alternative use is something that we record. Is it time value of money, everyone? Time value of money talks about, see, the value of money declines over the period of time. है ना? There was a time when we were kids. At that point of time, I could buy cold drink for barely 10 rupees. 500 ml was available at 10 rupees. Now the same 500 ml is 30 rupees. And you have to spend rupees 20 to get half of it. That means 250 ml. Is this only inflation? The value of money has also declined. People were getting good salary earlier as well, but now it becomes almost unaffordable if one particular person is earning. That's because value of money has declined. Liquidity and return. Liquidity and return refers to the amount where, acha everyone, if I ask you that you are supposed to pay me 10,000 rupees and you can quickly come up with that point, ki ma'am, this is 10,000. This is called liquidity. And diversification is basically you cannot keep all the eggs in one basket. Do not put all the money in one particular area. Keep on splitting it up and putting it into different areas altogether. That is what this specific area talks about. ठीक है? Done, everyone? चलिए. Now comes the next question. The answer is time value of money in this case. Done? Chaliye ji. Now let's move on to the next question, everyone. The next question says, which principle emphasizes on balancing the marketability of investments with the returns they generate? Marketability matlab whether we can make it in the market or not, whether you can sell that particular thing in the market or not. Is it time value of money, diversification, or the next part is liquidity and return or cash flow? Marketability of investments. If I want to buy and sell today, can I do it with a snap of a finger, everyone? If this is something that we can do, that is what we're going to include in it. Time value of money, diversification, liquidity and returns or cash flows. Everyone, what do you think is going to be the answer? See, time value of money, we know that this is related to the area of time value of money is that the value of money declines over the period of time because of inflation, because of the compounding. Interest is not added now when you're doing this, right? Then the answer is liquidity and return, everyone. If you ask me to pay right away, I should be able to pay you right away. That is what liquidity is about. Done, everyone? Chaliye. Now let's move on. The answer is liquidity and returns. Next is, which principle involves the duration of the risk and duration of assets and liabilities reduced to reduce the financial risk? See, financial risk is whether I can pay you back or not, whether I have good enough money of that ability to pay. My ability to pay should not be affected at all now. So that is the point that it is clearly talking about. So what's going to be the answer according to you? When we talk about duration of the assets and liabilities to reduce the financial risk, it is related to the area of risk and return, liquidity and return, reducing asset liability mismatch or hedging, or time value of money. Whenever you are trying to manage your risk now, we are talking about managing the risk. We cannot eliminate it altogether. We cannot run out of it altogether. But yes, we can try. That is hedging. Okay? Hedging is trying to cover the risks through the various techniques that we are applying. Done, everyone? Next question. Which principle ensures that the long-term fund requirements should be met from long-term resources? Everyone, if I'm using something which is short-term, in a long-term project, that amount will be recovered after a long period of time, and the short-term debt tenure would be over, and I will have to face the sound. I will have to face the music in the world that I was not able to pay on so and so situation, which is bad for my financial health. So what do? Diversification, then risk, time value. What do, everyone? All the long-term things should be taken care by the long-term things only, is reducing asset balance. We're again using hedging. Hedging is basically used to cover the risk. Okay? Done, everyone? Next question. Which of the following can be considered as an agency problem in the financial management? Conflict of interest between the company and its suppliers, company and its customers, company and the government, and the shareholders and the management of the company. What is agency management, everyone? Quickly, go ahead and answer. Patay, what is this agency, everyone? In a sole proprietorship, you are the owner of the organization and you are the one who's caretaker of the organization as well. Things are sorted because you are the owner, you are responsible for it. But when it comes to the situation where they're talking about agency problem, it arises in a company. Reason? What's the reason behind it? In a company, when you are giving your services, your management, the management is never consisting of shareholders. Shareholders would be there in the organization, but to cater in terms of investments. They're going to put their money into the business, but the business is run by the company's directors and the employees there. So in this case, what's happening? Your owner and the people who are managing the company, they are not the same. And both the parties feel that the other party might be exploiting them. That is why there is a difference or conflict of interest. between the two parties. So the answer is conflict of interest between the shareholders and the management. Everyone, here comes a question on ratio analysis. Keep an eye on it and let me know the answers. Equity is given, shareholders are given, and then what have they given? They have given share capital, they have given reserves and surplus. This is equities funds. Then comes long-term borrowings. Then we have current liabilities. Total of the balance sheet is 7 lakh. Your non-current assets and your current assets, both are given here. The values of these are fixed assets and non-current investments, and then we have current assets. Everyone, what are the ratios? What is the current ratio in this given situation? Everyone, try the question. Take a moment. Okay, let's try the question. Current assets divided by current liabilities is equal to your current ratio. Okay, the formula they are asking you is what is the current ratio? So when you're trying to find the current ratio to C upon CL, your current assets are of 2 lakh. Our current assets are of 2 lakh rupees. Our current liabilities are of 50,000. I have in this case your current assets are going to be of 2 lakh, while your current liabilities are of 50,000. Everyone, when we are trying to find the current assets upon current liabilities, how do we do it? CA upon CL, that is 2 lakh divided by 50,000, 5 4s are 20. What's going to be the answer? 4:1, 2.5:1, 3:1, or none of the above? Everyone? It is 2 lakh divided by 50,000. What is the idle current ratio, everyone? What is the idle current ratio? Current ratio is basically CA upon CL. The idle ratio is 2:1. This is liquidity ratios. ठीक है ना? 4:1, 2.5:1, 3:1, or none? The answer is current assets divided by current liabilities. Next question, everyone. Ratio analysis is always asked in the examination. Not once, not twice, but this particular topic comes in the examination every single attempt. Not even year, everyone, every single attempt. Another important ratios. debt equity ratio is given in the given information. 1.5 is to 1, 0.40 is to 1, 0.3 is to 1, or none of the above. Everyone, let's go back to the next point. What is the portion of debt and what is the portion of equity? Try it out. What's the answer, everyone? When we talk about the debt equity ratio, na, debt equity is basically talking about long term debt and equity. Equity is the owner funds, right? That is how we define equity. In this case, what are we going to do, everyone? In the given question, what are we going to do? Debt divided by equity. The formula for debt equity is very simple. Debt is above and equity is on the lower side. So in this case, your debt was 1,50,000 and divided by equity. That is 1,50,000 divided by 4 lakh. So 1,50,000 divided by 4 lakh, what is the amount? Sorry, 4 lakh plus 1. Equity includes both the share capital and the reserves and surplus. That means we are at a 5 lakh amount. That is 1,50,000 divided by 5 lakh. That means my answer comes out to be 0.3:1. What is the ideal debt equity ratio as well, everyone? Let's put a little more effort now and learn different aspects of the question as well. Everyone, what's the ratio for debt equity? Please like the session, everyone, and don't forget to subscribe to the channel and be there in tomorrow's session at 6 p.m. where I'm going to talk about numerical portion altogether. Pure numerical sessions are going to be there. What is the debt equity ratio? 1.5 is to 1, 0.4 is to 1, 0.3 or none. The answer is 0.3:1. Ideal ratio for debt equity? Everyone, when we talk about the debt equity ratio, na, your debt is 2 and your equity is 1. Whenever you are starting with your business and you want to invest with 3 rupees, this is for everyone. It should be 2 parts of debt and 1 part of equity. Why lesser of equity? Equity doesn't give me a tax sheet. Debt does. That's why. Done, everyone? The ideal ratio is 2:1. This is the answer. Easy and interesting. Chaliye, let's look at the next question, everyone. Which of the following is or are the objectives of ratio analysis? What are the basic objectives of ratios? Ratios is basically a fundamental method. पता है? This is a basic method which is used for financial statement analysis. This is among the various tools. Ratios, cash flow, fund flow, they are all a part of it. Okay? So when we talk about the objectives of ratio analysis, to know the areas of which the business needs more attention, are we looking forward towards just understanding more attention-based areas, or to have a deeper analysis of liquidity, solvency, profitability? Are we trying to find out the aspects from a detailed point of view? Or next is to provide making cross-sectional analysis. What do you mean by the term cross-sectional, everyone? That means you might be looking forward towards different areas, your competitors. So what's going to be the answer according to you? The answer would be all of the above. Ratios includes all. Because ratio analysis helps you to study your organization, it helps you to be do the particular further work as well. Whatever accretion is happening in the business, that means the profits and losses are also seen there, and the efficiency of the business, whether it goes up or not. Done? The answer is all of the above. The proprietary ratio, it's an important ratio, everyone. The proprietary ratio falls under which group? Liquidity, solvency, activity, or profitability? When we talk about the area of proprietary ratio, now proprietary matlab the money that the proprietor is putting into the business. So what he says is the organization's situation, right? That is why they'll move towards debt. Otherwise, why would any organization move towards debt? Then liquidity ratio talks about, you want me to pay money, do I have money to pay you right away? Then comes solvency ratios. Solvency means if you ask me today, or you ask me 1 year later, or 2 years later, then I develop expertise in it. So solvency problem can also be gone. Solvency ratio is basically the ratio which talks about specifically the earning. Done? Then next is activity ratio. How much active you are is the point of activity ratio, everyone. Think about it. When you are doing more work, that means you are producing more. If you are producing more, that means the factory owner is really happy with the results. Then is profitability ratios. Profitability ratios talks about the profits or losses of the organization. When we talk about proprietary ratio is basically the owner's funds only. At one point of time, the most important thing as a person was having a job. Solvency ratios talks about whether you can repay in no time or not. Okay? Otherwise, what happens is the endorser, the one who endorses it, is also facing a problem. Endorsee, on whom the particular case had been put, that there's a claim against him or her, then that claim, ability to pay, ability to reserve, all that area is covered under this specific area, right? Next question, everyone. Debt service coverage ratio. This particular ratio is super important because this is frequently asked in the examination. Everyone, debt service coverage ratio. This was also asked in PNB promotion papers. Judging the margin of safety, judging the firm has borrowings disproportionate to its net worth. Judging the capacity, coverage ratios are basically too judgmental. Whether you can repay or not is always their question. So debt service coverage ratio would be what? Judging the margin of safety available before there is a default in repaying the loan. Under this specific area, you are always covered with the fact that whether you earn enough to pay off the loan or not. Whether your regular income can cover this portion or not. So debt service ratio talks about this only. That is, you judge the margin of safety. Margin of safety is once you are over and above the cost. From cost, you move on to margin of safety. Then everyone, which of one of the following is true? We have taken up both earning per share and PE ratio. Earning per share is what is your portion if you are a shareholder. Everyone, both earning per share and PE ratio. What do we talk about it? Okay, everyone, apologies. Pata hai, earning per share is about you take up a cake and you divide that cake among different people. How much portion of the cake can be eaten by each person is earning per share. PE ratio is a very popular ratio, that is market price per share divided by earning per share. This is PE ratio. Both of these things play a very important role with the stock market of the organization. While calculating the debt equity ratio, fixed deposits from the shareholders are taken into the part of debt. Any money that we borrow from someone is obviously a part of debt, and we include only and only long-term debt. No short-term debts are a part of it. Then comes while calculating the quick ratio, everyone. Quick ratio is what? Quick ratio is liquidity ratio. Quick ratio is something that you and I can define as liquidity. Okay? When we talk about liquidity means if I ask you to pay you right away, can you pay me right away or not? That is something which we talk about in this area. Then what's going to be the answer, everyone? See, when we talk about the specific area, there's one particular rule that we have to understand. When we talk about quick ratio is related to liquidity. Liquidity matlab all of a sudden if the person is standing on my head and saying, "Yaar, ma'am, you have to pay," I should be having enough money to pay. It is quick ratio. Or current liabilities are taken into this area. This is wrong. Debtor turnover ratio is higher when the company sells more goods on cash basis. No, debtor turnover ratio is higher or lower based upon in how much time these people are paying us. Now, when we talk about earning per share is your earnings from your business. So, we cannot say this is purely dependent upon the market. So, in this case, the correct answer is B. Yes, the fixed deposits that we're taking from the people is ultimately a part of our loan. Done, Ji? Now, let's move on to the next point. And this is a question from the Macmillan book itself. So, let's understand this question. Okay, what does this question talk about? The question says that when we talk about the specific area of a student purchases computed by obtaining a loan or simple interest. We're taking a loan on simple interest. What is the formula for simple interest? Do you remember that? The computer costs 60,000 and the interest on the loan is 12%. So can I find the simple interest, which is equal to P into R into T? So in this case, it is 60,000 as principal. Rate is your 12%. And the question says if the loan is to be paid back within 2 years. So what is going to be the total interest rate, everyone? What is the value of total interest rate? 60,000 into 12% into 2. Into 2 means 14,400 is the answer. Then this is the formula for only and only the simple interest calculation. Nothing else. The question has asked us to prepare that part. Next point. This is the answer, everyone. 60,000 into 12% into 2. Next question, everyone. In this area, they're talking about what is the amount after 2 years. See, the principal was 60,000. Agreed. The interest was 14,400. Agreed again. Now, what is the value that you will be getting? Is it 60,000 or 14,400? What is it, everyone? When we are having a simple interest situation, we are not only having interest, but we'll also get our principal back as well. So in this case, what's going to be the answer? Done, everyone? What's going to be the answer? The answer is 60 plus 14,400. The answer is 74,400. Done now? Chaliye then. Let's move on to the next question. Everyone, a very, very important area to be covered. This is a part of working capital. Now, which among the following formulas is not the formula proposed by the Tandon Committee? Tandon Committee had given actually 3 formulas. So, for working capital calculation. What's going to be the answer? MPBF, maximum permissible bank finance. This is the maximum that you can borrow based upon the money that you have invested. First is current assets minus current liabilities. That is you find the working capital and then you divide it by, then you find 75% of it. Okay, that's the first point. MPBF, maximum permissible bank finance. Matlab, if you need money, then how much portion of it can be sponsored by the bank? Everyone? In this case, what's going to be the answer? Second part is 75% of CA minus or current assets minus the hardcore current assets. Third is 75% of the current assets minus the current liabilities. Matlab the value is given to the current assets altogether. The answer is all of the above, everyone. All these three are part of tenant committee methods. The answer is all of the above. Chaliye ji. Moving on to the next important question, everyone. The question says that the debt equity ratio of a company is 1.5:1. It is less than the ideal. What should I do now? How will the transaction of goods affect the ratio? You purchase some goods on credit, everyone. Debt equity ratio. How will the transaction impact debt equity ratio? Debt equity ratio changes. It increases, it decreases, it remains unchanged, or everyone? When we talk about the debt equity ratio, debt equity ratio is based upon solvency, whether you can repay those particular things or not, right? So what do we do? Debt equity ratio looks like this, everyone. This is debt divided by equity. When you have that suicide, that is the banking area. When we talk about the debt equity ratio, when you are having too much of debt, it's a complete suicide for the organization. Financial risk would be so much that the organization is doomed to die. They don't have an option, they will die. Now, in this case, they are doing nothing else. They are doing regular work. They are just purchasing goods on credit. So, in this case, they are getting goods. It doesn't affect equity, it doesn't affect debt. Then, when we talk about the area of cash, there's no cash, there are only creditors. So, in this case, in the goods area, one part relates to the current asset, one part relates to the current liabilities. But the particular formula is debt upon equity. Goods purchased on credit is not a part of it. It's neither a part of the shareholders' funds in terms of the working altogether. Done. Okay, everyone, in this case, what's going to happen? Your debt is not changing, your equity is not changing. None of them is changing because debt are long term, equity is long term. Current assets and current liabilities both are short term in nature. So, technically, this question is just to confuse you. The answer is there is no effect. Acha. I think NPV wala question I'll do it tomorrow. We'll be discussing how to solve these questions as well. Numerical questions we're gonna do in detail. Which capital budgeting method calculate the relationship between annual savings and the total capital expenditure to determine the time needed to recover the initial investment? Everyone, if I put a lot of money in the business, I need to recover the funds as well. How do we do that? Simple payback period, accounting rate of return, profitability index, or internal rate of return. But when I have a risk that pata nahi I'll get the money or not, or I am scared I'm doing it, the business for the first time, then at that point of time it is super important that simple payback period is taken up, because accounting rate of return talks about the rate, profitability index talks about you adjust it as per the time value of money, find the value. Same thing goes with the internal rate of return. In this case, you are just trying to find out if you want to recover your funds back, in how much time can you recover it, right? Done. In this case, the answer is payback period. Next question. This is for YTM. I think I'll be keeping this question for tomorrow as well. I'll be discussing these questions in the tomorrow class as well, everyone. So please be there. Which of the following is true about forward contracts? Forward contracts matlab they're based upon futures. Future matlab future pricing. Everyone, when we talk about forward contracts, they're futuristic contracts. The contracts in which we might have to pay, or we might have to materialize this particular concept in the upcoming future, but not today. They are standardized contracts. They are basically low credit contracts, or they help avoid liquidity risk, price variations, and potential losses, or they are rarely used in financial markets. They are frequently used. The standard, they help avoid liquidity, price variation, and potential losses, or they are rarely used in the financial markets, everyone. What is true about forward? There are two things, forwards and futures. Okay? Forward is also futuristic pricing, deciding in advance. Futures is also the same thing. So what are they talking about? What is the forward contract? When we talk about futures and forwards, now there is one major difference. This particular area, futures and forwards both have looked forward towards the pricing being high in the future. The particular thing becomes scarce. When we talk about future pricing, the pricing is determined, and that pricing is being used. So in this case, when your pricing is done and future and forward, under forward contract you sit with the other party and you have an over the counter. Over the counter matlab both the parties are going to sit down and they will discuss the pricing. When such a thing happens, what do we do? When their pricing is determined, both the parties will have customization. Under futures, there is no customization, there's a standardization. Take under forward contract, you have this particular thing, right? But the point arises, What's the common point? I want to buy dollars in future. I can opt for futures, I can opt for forward. If this is done in a standardized contract over the exchange, then it is futures, otherwise it is forwards. ठीक है? Over the counter मतलब both the parties will sit down and customize the pricing. Everyone, find the GP of this question. Inventory is given, purchases are given, sales are given. What would be the GP, everyone? I've done a similar question recently. To find the GP, you take up your opening stock plus purchase plus all the direct expenses minus closing stock. Opening stock was 2400. Done. Closing was 3840. Done. Purchases were 15205. But I can see return outward. I returned goods worth rupees 185. They're the direct expenses. Carriage inwards is done when we are purchasing something. Manufacturing is also a part of it. And even the wages outstanding. This amount is yet to pay na, that's why. The loss due to fire and the indirect expenses can be removed. Total cost comes out to be 15205 minus 185 plus 524 plus 280 plus 96 minus 3840. The amount comes out to be 14,480. Our sale is of 20860 minus 860 है ना, minus 860. Done. These three are added. This is to be taken out. 2400 plus 15205 minus 185 plus 524 plus 280 plus 96. Now 20860 minus 14,480, everyone. 20,000 minus 14,480. Then there's some mistake out there. Oh, let me make it for you. Preparing it as per trading account. This is your 2400. When you look at your purchases, 15205 minus return outward, when we are returning it, 185. We are having 15020 here. Then our sales is of 20860 minus 860. We are at 20,000 here. Then closing inventories of 3840. Your carriage inwards was 524. Wages were 2800 and 96. I hope this is visible, everyone. Visible now. So you have 2400 plus 15020 plus 524 plus 2800 plus 96. Minus 23,840. Now this is the particular method that you have to use. There was some calculation mistake. This comes out to be 23,840 and this comes out to be 20,840. So the difference is of 3,000. So the answer is 3,000. Similar question we have done recently. The answer is 3,000. Okay? Chaliye everyone. Now let's end the session here itself. I'll be meeting you tomorrow. So before we end the session, let me show you where to go. Go to our website altogether. On our website, go on to the area of JAIIB CAIIB Mahapack. This is where you will find all the details. Okay, our Mahapacks are all here, everyone. It is better if you're looking forward to it, then purchase it right away. Go ahead and use the code Y541 and you can get the maximum discount. So do not wait at all to get this particular Mahapack, because in this case you're getting both JAIIB and CAIIB in one go. That is way better, है ना? If you're preparing for both, then why not aim for both? Okay, that's it for the day. I'll be meeting you tomorrow at the same time, 6 p.m. So please be there, everyone. Thank you so much.